Hello, my name is Joris and I'm the founder of OpUgrow. Today I would like to talk with you about Huron Consulting, one of the stocks we currently hold in our portfolio. This is our current portfolio with selected stocks. You can also find this on our homepage. In the last 2 months we have outperformed the index with over 4%. The share price of Huron Consulting could go up with another 32%. But is there still more upside possible? The answer might be more than you expect. Huron Consulting is a US-based professional services firm. They consult on topics from growth strategy to operational transformation, with a strong technology and data analysis angle. And they are active across a wide variety of industries. Their head office is in Chicago, with many locations across the US, but also some locations in Canada, India, Singapore, Switzerland, and the UK. The company has a typical consulting risk profile, meaning that they need to remain relevant and show impact to their clients. They have been recognized as a best firm to work for in 2024, as it's fostering a culture where it's possible for its employees to be empowered and innovate themselves and grow personally and professionally. And with a market capitalization of $2.7 billion, this would be a mid-cap company. Furthermore, Huron Consulting currently does not pay out any dividends. Huron Consulting has had a revenue growth over the last years of 14%, excluding the impact of acquisitions. In their strategy update from March 2025, Huron Consulting stated that they want to achieve low double-digit annual revenue growth until 2029. This would be overachieving the industry average of 6.7%. For our base valuation case, we're currently assuming only 5.4% of annual growth over the next years. So that seems to be fairly conservative. When looking at the free cash flow margin, it has steadily increased over the last years to 11.1% in 2024, which is in line with pre-COVID margin levels. Based on the strategy update of Huron Consulting, the company aims to have a future free cash flow level to be at or above 2024 levels. For our base valuation case, we're currently assuming 7% of cash flow margin for the next years, which is actually also conservative. Huron Consulting published its Q1 results on 29 April. It projects 2025 revenues of $1.63 billion. But based on prior year quarterly revenue patterns, we think it's likely they will overachieve, potentially even towards $1.75 billion. The margin results for Q1 were negative, just like prior years. But we also currently project a good year-end margin well above 2024 levels. So both numbers are well in line with the Huron strategic guidance until 2029. When looking at the capital side of the business, the company has no debt issues. It has a solid interest ratio coverage. And based on the risk portfolio of the stock, equity holders would expect at least a yearly return of 6.5%. The risk profile of the overall market is higher. For a stock with an average risk profile, an equity holder would normally demand over 8% of yearly return. Okay, let's look at the valuation options in this stock. The first column shows our base case. In the next column, I've added one more scenario. It's more aggressive, but actually very realistic. Here I expect a 10% yearly revenue growth for the next 7 years, an 11% free cash flow margin, coupled with a higher future terminal value growth after 7 years of 5%. Additionally, I increase the cost of equity to a number which is closer to the market average. This would predict a share price of $410 or 170% above the current share price. The stock also has a great momentum, with a score of 9.6 out of 10, and is currently trading above its 50-day and 20-day moving average. It has also outperformed the S&P over the last period. The uptrend started from the mid of last year, and it coincides with the market realization that Huron should deliver significantly higher cash flow margins compared to the period 2021-2023. Based on all valuation and technical indicators, our AI models signaled that this is a stock that you should have. In the next video, I will share with you another stock. If you want to learn more about our portfolio, please like this video, subscribe to our channel, and visit us on our website, opyogrow.com. When visiting our website, please also read the T's and C's before using our information. Thank you for watching.